The market to watch here is the DAX. I mean, Europe as a whole, yes, the EU is the world's largest market if you take it as a whole. But obviously, the exporting engine, the trade engine of Europe is Germany. And if you look at the DAX, it is down significantly on the month. It's up today a bit, but that's sort of, the backlog of concern over the German political crisis, which has now ended. You've seen a huge downfall over the course of the last month in the DAX. Year to date, also hugely down. Volkswagen, Daimler. I mean, these are the big German manufacturers that all Americans know about and they buy. These are the ones that are going to get hit. And it's not just German exports to the U.S. It is German cars made in, South Carolina in the South and then exported to China. So the Germans are the ones to watch on this. Now, you're right. The volume of trade transatlantic is, in particular, the value of those exports. Because obviously a lot of the trade that comes from China to the U.S. is sort of low end of the manufacturing food chain. The value of the stuff that comes transatlantic is much higher end. Again, it's autos, it's a lot of these high-end German manufacturers. And so, and the other thing which I think the reason it's hit sort of late in people's consciousness is Trump has touted this as the big trade war on China. He's talked about China, and initially Europe was kind of almost an after effect. It was sort of like collateral damage. He announced these big steel and aluminum tariffs, and it was like, actually, there is no steel and aluminum that comes from the U.S. from China. The ones that get hit on this are the Europeans, because they are the countries and the markets that export steel and aluminum to the U.S. And then suddenly everyone in the U.S. woke up, the Trump administration said, well, actually, hey, do we have an opportunity here to kind of go after the Europeans? And, he's obsessed with cars in particular. We know that from his tweets. We know that from what he said publicly. The Europeans, he feels, are the ones that are jipping off the U.S. on cars. And so I think you're right. I think the markets have paid attention to this. And I think the reason the DAX is down so much in the last month is because the markets begin to wake up on this.
That's the reason we took our show to the port of Charleston, South Carolina. Because if you go to Charleston, maybe the best city in the United States, and you look over a fence near the Battery, you'll see about 5,000 BMW X5s. They're SUVs. They're all made in Greenville. They're shipped on a train, and they're shipped out of the port of Charleston all around the world. The X5 is not made in Germany. It's made in the United States. I don't know if people understand that as much here, but is there a growing sense of fear, Peter, in Europe? We see all the China rhetoric, and we think China is this huge economy, and it is. But is there a growing fear among the Europeans that the president will ratchet up his attention there?
Oh, absolutely. And frankly, it's not growing fear. It's been heightened fear now for a good 3 or 4 months. I mean, the steel and aluminum tariffs were frightening enough because, again, this hits European manufacturers much more than it hits Chinese manufacturers. But, the car issue, particularly for Germany, is existential. And so the amount of, because Germany has such a huge influence in Brussels, the ratcheting up of the Brussels machine, and again, we had to defend the FT on your criticism here, front page scoop on this, that the EU is preparing $300 billion worth of retaliatory tariffs on the U.S. if Trump goes ahead with these auto measures.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.